Yo, yo, what's up, everybody? How y'all doing? Welcome to another episode, Black Diamond FX. All right, so tonight we will be looking at a more in-depth look into ICC. And when I say in-depth, we're going to dive a little deeper into the market structure, the liquidity, indication, correction, and continuation as well. All right. But before we do that, I really appreciate it if you guys go ahead, hit that subscribe button, hit that thumbs up, share this with about 100 of your friends. All right, 100 of your trading friends, put it in your trading communities. Let's flood the internet with the Black Diamond version of ICC. All right, I promise you, if you haven't seen any of my ICC videos, you're gonna love it. Okay, you're gonna love it because I'm gonna break it down and I'm gonna explain it fairly simply for you guys. All right. So the first thing we do, all right, now in order to trade the way ICC, the way that I trade it, you have to have an understanding of market structure and you have to have an understanding of liquidity. All right. Market structure fairly simple. The market moves three directions. It goes up in an uptrend, making higher highs and higher lows. The market moves down in the downtrend, making lower lows and lower highs. All right. And then the market moves in consolidation. All right. Now we don't trade consolidation at all. All right. Consolidation is we just wait for it to break out. See like this little area moving sideways right here. All right. You mark the high and the low, wait for it to break out. All right. We're gonna get into it. We're gonna get into it because I'm gonna show you how to do each step, whether it's an uptrend, whether it's a downtrend, and whether it's consolidation. We're gonna go over all three tonight. And entries as well, because a lot of people are having trouble with entries. So we will cover entries as well. All right. So the first thing we do on the higher time frame. Now your higher time frame could be your 1 hour, two, three, four, any of these high time frames. All right. You can look at the four, all right, and we see that the market is bullish, all right. Overall, we're bullish on the four. Let's go to the one, all right. Still, same thing, 1 hour, bullish, all right. So let's see what we have. So remember, I just said consolidation, right? So what you want to see is where is price currently? All right. Where is price currently? What is it doing? Is it going up? Is it going down? You want to see the structure. All right. And you can see here, price was consolidating. All right. So I guess we'll start off with a consolidation. So we'll start off with price was consolidating. All right. So what you want to do, you want to mark that high and that low of that consolidation. All right. So let's mark here. That's the high, the low. Can either do this wick down here or these lows here. I'm gonna use I'm gonna use this wick here as the low. All right. I'm gonna use that. And the reason being is because I already know where I'm looking for an entry at. All right. So now what you want to see, first you get indication. That's the I. Okay. So the indication is gonna break out of either the high or it's going to break out of the low. All right. Now, we were in an uptrend, correct? You guys can clearly see that. So we're expecting price to break out of the top side, giving us bullish indication. Now, let me explain this to you because I've seen this several times. Sometimes in an uptrend, what will happen is we'll break out the bottom out of the low, and you may think that's a bearish indication. However, if you're in an uptrend and it breaks out of the bottom, breaks out of the low, what you want to do is look over to the left and see if price is testing or taking some kind of internal liquidity, like a fair value gap or an order block. Now, this here could have broken this low and came because we have fair value gap right here. All right. That's internal liquidity. Something going, I don't know what's going on with my keyboard, but so price could have broken out the low and took this and then continue up. That would be only a liquidity sweep. Because what happened was it'll break down, it'll come instead of breaking the high, it'll break the low, sweep these lows, mitigate this fair value gap, and then head on up. All right. But that didn't happen. We got bullish indication. All right. Once we get bullish indication, you're going to wait for the correction. Now, the correction, you want the correction to come back down somewhere into this trading range from the low to the high point. All right. It's going to come back somewhere down into the, come on, keyboard, somewhere down into the range. All right. And then it should head up. Now, where is it going to come down to? That's the question. Because the way the way Psy trades it, and Psy is, if you probably heard of Trades by Psy, that's his YouTube name. The way he trades it is he waits until price comes back. It makes the correction, all right? Comes back right where it breaks this high right here. When that candle closes on the 15 or 5, then he gets in the trade. I don't do that. I don't do that at all. Because if you do that, your stop loss is way down here, either underneath this order block right here or underneath this little smaller time frame low. All right. That's a big stop loss. That's a big stop loss. All right. I don't trade like that. All right. What I do is I look for internal liquidity. Once again, internal liquidity, fair value gap, order block. What do we have on this? You guys, if you know what an order block looks like, this is an order block right here. Plus, we have fair value gap right there. All right. A fair value, what's a fair value gap? A fair value gap. See the wick, the top wick on this candle. All right. And the bottom wick on this candle. Notice how they don't overlap. All right. That's called a fair value gap. Candle one and candle three. All right. See, notice how a lot of these will overlap. Say um, like a lot of this is balanced. Let's see if I can find one overlapping. See like candle one here, this black one, you got here, this white one, and then candle three. Look at the wicks. See how they overlap? It's balanced. All right. There's nothing there for price to come to. There's no internal liquidity there because everything is balanced. But here is not balanced, it's imbalanced. So price will come back, grab that liquidity either to the fair value gap or the order block. And I like to mark the order block, right? And wait for price to come down into here. All right. Now, once price comes down into here, all right, as it's coming down, that's your correction. All right. Once price in between your correction and your continuation, the two C's in ICC, in between that is going to be your entry. All right. So, what do I look for to enter a trade? Watch this. Let me do this drawing for you guys right quick. This is what I look for. This and it's the same thing you're gonna see when I do the uptrend and the downtrend. You're gonna see it's gonna be the exact same thing. All right. So we got price coming down for our correction, right? And it's gonna come up. It's gonna come down, make another low. And it's gonna come up. It's gonna break this high that was made. All right. Then it's gonna come down here, right there. That's my entry right there. And we get the continuation. All right. And if you look at it, this is a liquidity sweep. This sweeps this low. All right. Inside. Now, all this got to come inside of, is it going to come inside of your fair value gap, inside of your order block, inside of your area of liquidity? All right. And you're going to see that. Now, what I'm going to wait for is on a, either on the 3 or the 5 minute. I'm going to wait for this a last low to be made. All right. And then I want to see the previous high broken. All right. See like this high right here? I want to see it broken. All right. Once it breaks, a lot of people can get in there. That's called a CISD, change in the state of delivery, or you can look for internal liquidity on this smaller time frame range. All right. And a lot of times you're going to get it. Enter your trade and then up, which is stop loss right down here. All right. So just like I will find this on the 1 hour, that's how I enter on the 3 minute or the 5 minute. All right. And don't worry, once we get to there, uptrends and downtrends, I'm going to show you. Even here, I'm looking for the same thing. I'm looking for it to come down. All right. Once it gets in here, my liquidity, either fair value or order block, I'm going down 3 minute, 5 minute. Reset my chart view. All right. I'm going down 3 minute or 5 minute. All right. And that's what I'm going to look for. All right. And don't worry, we're going to find one. But right now, this is GBP JPY, just waiting for the correction. All right. Waiting for the correction. Let's see in an uptrend. Let's see what we can find one with an uptrend. I want one with a solid uptrend. Let's see. Oh, let's look at this right here. We already have one. Look, okay. Let's look at this uptrend. Now you remember what I just showed you with the liquidity sweep, right? Look at this. It's going to come down, sweep liquidity into what? Fair value right here. And this is on the 1 hour. You remember I told you it's going to happen on the 5 and the 3 minute too? See that fair value gap right there? Look, let me drag this. If I can get my mouse to grab something wrong with my mouse, man. I can't. All right. And then look what happens. I could have entered this on the 1 hour. Look what happened. Swept the liquidity here. Boom. Tapped into, tap in. Look, broke this high, just like I told you. Broke this high right here. Let me mark it. Broke this high. Came back down to internal liquidity, which is what? Fair value. See the fair value gap right here? Watch. Right there. Boom, boom, boom. Come on. Right there. That's your entry. This your entry. And this is 1 hour. Notice I didn't even go down to the 5 minute or the 3 minute yet. But let's go down to the 5 and 3 and see. Let's go to the 15 first. All right. This is the 15 minute. This is where I first tap here. All right. This is our indication prices are going to go up. Came back down here. All right. We're going to look for entry in this area over here. Let's go to 5 minute. Make it a little bit bigger so you guys can see. Let's see. Come on. I don't know what's going on with my computer, y'all. It's got a mind of its own. Slide it over. All right. Let's see what we got here. Look at this. Now, see if you can spot. Came down, made this low here. All right. Went up, came down, another little one here. Then this was the lowest point right here. That swept this. All right. You can even see it got like this was a little leg, right? Right up in here. All right. Broke this high right here. Broke this high, came down. Now, it didn't come all the way down. We didn't get a deep retracement, but it did come into fair value where you could have got in your trade on a 3 minute, your stop loss way down here. All right. And price, hold up, and price went zoop, all the way up there. See that? All the way up there. And you target the previous high. You can target this high or this high, either one of them. Target your high. All right. Target your high point. All right. Let's see if we can find one in the downtrend. Hope I'm making this simple for you guys. Let's see. Let's see. Let's look for a downtrend. Hold on. Reset my chart. Let's see what we got here. Boom, boom. This one, I want to find one that's real clear for you guys to see. Let's try a different pair. Let's look at Euro JPY. Do we have something there? Hold up. I am cherry picking because I want you guys to see it clear. All right. Let's look at GU. Let's see what we got on the 4 hour. Let's look at GCAD. Oh, this was one here. All right. Let me erase this. This would have been a nice one. All right. So let's look at this on the 1 hour. All right. Okay. So look what happened. This is a downtrend. It's a clear downtrend, right? And look at what we got. We got now price was coming up and it pulled back. All right. Now when I mark these, I mark the pullbacks. If price is going up, I mark the start of the pullback and the end of the pullback. All right. The start and the end. All right. I've, I don't know if it really much matters, but I marked the start of the pullback and the end of the pullback. All right. See how it went up and it pulled back here? I marked that high, marked that low right there. Okay. And then look what happened. We got indication up top. Okay. But look what else happened. After we got indication up top, look, boom, we broke through and we got indication on the bottom side. All right. When it happens like that, now we're looking for a potential bearish market. All right. Went from looking for a bullish opportunity to a bearish opportunity, right? So now look, we got indication below here. Okay. Now, same thing. We want price to go to where? Internal liquidity. And where do we have internal liquidity? Same place. Fair what? Fair value. So we had fair value here. It didn't quite close it all the way, but it came up. Watch this. Came up and closed it. Came up and closed it. Even got like a little order block right there. All right. But it came up and closed the fair value gap. And this would have been a nice trade. I mean, this was beautiful. See how it just dropped from all the way up here. And this is on the 1 hour, all the way down there. All right. So you got your indication, your correction to internal liquidity, and then your continuation coming down. And then look at this. Remember I said the first one was the bullish indication? Look at what happened. So we got bullish indication, but we didn't have no liquidity for it to come down to. So it just broke straight through. See that? It just broke straight through. Straight through. All right. So stuff like that, you really have to pay attention to. If you can't find the liquidity, all right, maybe it's just going to break straight through it. All right. And look, the liquidity was over here. We had bullish fair value gap. We had not bullish, bearish fair value gap and bearish order block. All right. Now let's look for our entry up in here. Let's see. 15 minute. All right. Let me make it a little bit bigger again. I want you guys to see it clear. Come on. All right. Let's look at the 5. Where is it? Over here. Look at that. I already see it on the 5 minute. Look at this right here. You would have got in this trade way up there. Way up here. Look at that. So We got equal highs. Our last high point, okay? And look what happened. You could have got in here or here. Because look, this was a high point. These are equal. These highs were equal. But we got bearish indication here, okay? Price pulled back up order block. I think this one would have been a little bit better. All right. And look what happened. We got bearish indication. Hold up. Bearish indication there. All right. Bearish. Price came back. Look, a little small, small, tiny, tiny fair value with what? Order block right there. A little order block right there. Right. Look at that. Boom. Wicked it and went on with the drop. And if you missed it, look, even right here. Boom. Right here. Came up right here into fair value and then dropped. All right. What happened right here? Another one, another entry. Remember, I marked the pullback. The bottom of the pullback. Oops, my bad. Oh, shucks. I can't wait to tell my new computer get here. Bottom and top. Look at what happened. This was just a little wick right there. This wasn't much. All right. But well, I'm saying it ain't much, but it is bearish indication. All right. And look what happened. Price came up, swept this little high into fair value right there. Then it just dropped. All right. But we would have been in way up here. All right. And just ride it down. Price pull back and start coming down. Movie stop loss. Boom. As price breaks these lows, that's when you start moving your stop loss. All right. If you get in up here, price break, come down, pulls back. It comes down and it breaks this low right here. Move your stop loss here. Comes down, pulls back, go down, break these lows, put your stop loss here. Break this low right here, put your stop loss here. When your stop loss is there, look at that big old drop. That's a big, beautiful drop right there. Beautiful. Beautiful. I mean, and it dropped way down too. That was nice. All right. But I just wanted to show that to you guys. I hope it's been helpful. I hope it's in depth enough for you guys. Liquidity, before we get into it. Oh yeah, I already told you. We got internal liquidity and we have external range liquidity. All right. When when we're looking for the correction, we want the correction to go to the internal range liquidity. And when I say internal range liquidity, inside of the range. All right. We want so if we get bearish indication down, we want it to pull back inside of the range. All right. Inside of the range. And then that's when we look for our entry. All right. Let me show you one more time. Let's see. I want to show you guys one more time. So look, I don't know how well you guys understand ranges. All right. So here we got a range from this top, this high to this low. All right. We have the top. All right. And we have the bottom of the range here. All right. There's liquidity here above this high. That's external liquidity. All right. I'll type it out for you guys. External liquidity. All right. The same token, we have liquidity down here beneath the low, which is also external liquidity. All right. Inside of this range, we have fair value gaps and we have order blocks. Any liquidity inside is considered internal. All right. So we got this order block here. That's internal. All right. Another one here. We got fair value gap right there. That's internal. Another order block here. That's internal. And this was the one that got tapped. All right. Now, when you're looking at those order blocks, you want to see an order block that has a fair value gap with it. All right. If it don't have a fair value gap, 9 times out of 10, that order block is very, very weak. All right. But that's how you spot external range liquidity at highs and lows. All right. Internal range liquidities, fair value gaps, order blocks, supply demand zones, areas like that. All right. Now, I hope this video helped you guys. If you like it, please hit the thumbs up. Please hit that subscribe button. Look down in the description. I have my affiliate links. Support your boy. You know what I'm saying? Um, Show some love. I don't ask you guys for to pay for anything, but just show some love and use my affiliate links. And I'll talk to you guys later. All right. Hope y'all have a good day.